It is your September mortgage and housing update, and I am filming this the day after the Fed meeting. If you're new to the channel, I've been a lender for 18 years. My team's licensed in 50 states. Call us, 786-933-2077. Okay, so yesterday the Fed dropped the Fed funds rate by 1/4. The next question we often get is, did mortgage rates go down 1/4? No, the Fed does not control mortgage rates. So let's talk about mortgage rates real quick, because I think that is the headline that I haven't talked about enough. I've done a couple shorts where I'm like, everybody's refinancing, but I haven't really explained what's going on. So if you look at 2025, and I'm going to have a link to a graph for you guys in the comments, what you'll see is that most of the year, the 30-year fixed mortgage rate for a conventional loan, not Govy, Govy's always lower, has been somewhere between 6, 7% in that range. That's what you see bouncing around, okay? And sometimes you'll see it go, oh, 6, you know. That is where the 30-year rate has been for the bulk of 2025. Now, in August, there was a big job revision, and it's at that point that we started to see rates come down. As I film this, the average mortgage rate is 6.35%. So before that Fed meeting even occurred, we saw this big move from at the highest, that 6.99, 7 range, all the way down to, I think the lowest we hit in the last few days on a conventional was probably 6.25, okay? So when you're sitting there going, well, wait a second, I thought that the Fed controls it. It's not. That's what you guys need to know about mortgage rates. Mortgage rates, does what the Fed say, or what we think the Fed is going to do, does it have some level of impact? Yeah, totally, absolutely. But so does the 10-year Treasury. So does what's happening with mortgage-backed securities. There's a laundry list of what goes into what a long-term rate will cost you, okay? So Fed cuts rates actually went up a little bit after the meeting. And you're like, what? So that you're telling me, Jen, that rates have been coming down, then the Fed meeting happens, they cut rates 1/4, and mortgage rates go up a little bit? Yeah. The devil's in the details. So I always like to lock my clients before the Fed meeting. And if you've talked to me and my team this week, especially me, we probably had the conversation of, hey, you like that rate, I like that rate, I think we should lock. Nothing good happens after a Fed meeting. And to a large extent, that has been what we've seen over the years. Because what happens is the markets are anticipating what the Fed's gonna do. And in this circumstance, the markets had anticipated and already priced in the Fed doing a 1/4 cut. Now remember, they don't cut mortgage rates, they're cutting the Fed funds rate, which is a short-term rate. They've already taken that into consideration, but there was a 90% chance that they thought the Fed would indicate or commit to doing 2 more cuts this year, okay? So there was some element of pricing that in. There were some people that were very hopeful that they would do, a 0.5% cut. That was less likely. So this meeting, I was watching it yesterday, and I literally, I'm being honest with you guys, I was like, oh my God, this is such a headache. The double talk, the constant double talk. And look, I think the Fed needs to be independent. I do believe that. I don't think our president should control the Fed. That is a recipe for disaster, regardless of who the president is. But I was also watching Jerome Powell, and I was like, there is so much double talk going on here. And the overall story is, their opinion is they have a dual mandate. They're worried about inflation. They've seen the job numbers. They've seen economic growth. None of that's looking real good. But then they're still worried about inflation. So it's like, my friend sent me this great video. I might put it in the comments, but it's a comedy show where they're talking about cooking shows. And it's like, supposed to be a Gordon Ramsay type character. And he's talking to the chef, and he's like, that was the most memorable meal of my life. I wanted to throw up and die because it was so amazing. And it goes back and forth, right? Between it was the best meal ever, worst meal ever, and you're like, does he like it? Does he not like it? Does he like it? Does he? That is what Jerome Powell's speech was like. You're like, wait, is the economy terrible? Is the economy good? Back and forth, back and forth, back and forth, back and forth. And I think that's, what we're seeing across the board right now is it's a bunch of different levers where people are waiting to see what happens. And I don't want to say it. I'm going to say it. I do feel like at some point over-analysis is paralysis, and that is what I feel like I'm seeing right now. Like the jobs, economic growth, the Fed did so many increases in such a short period, 22, 23, and then we got that bit of a cut last year, but it's like at some point, at what point do we get more, right? It was jacked up fast and quick to throw on the brakes, and the brakes have been on for a while. So what is going to make it so they let the brake off? The threat of inflation is something that you're going to have forever. Like, welcome to the United States. So very interesting to watch. Look, I am not an economist. I'm not pretending to be. I'm just saying that after watching that, especially, I was like, whew, this feels like analysis is paralysis. So mortgage rates, guys, they're still good. Like, yeah, they went up a little bit after the meeting. What do I expect? Look, if we see inflation go up, you're going to see mortgage rates go up, because with mortgage rates, one of the factors they're always keeping in mind is what is the Fed going to do? And if we see inflation start to tick up even a smidge, they're not going to do any more cuts this year. So you'll start to see mortgage rates go up, because if they don't do any cuts, that affects the greater economy. Okay. Jobs are going to be something we're watching as well. Right now, jobs have been the canary in the coal mine, right? I mean, I would argue that chicken being $15 for 4 chicken breasts was the canary in the coal mine, or I'll stop. But yeah, jobs are going to be something that's watched. If the job reports keep on coming back at this level, if the economic growth is stagnant, at some point, they've got to do more cuts. But as long as they're afraid of inflation, it makes it really hard for them to do that. And look, who knows with the tariffs yet, right? There's a lot of people who think it's not an issue. It would have been an issue. We would have already seen it if it was going to happen. And there's other people that are like, lowering rates would be the greatest disaster of all times, okay? Everyone's very divided on that. So as a home buyer, as a homeowner, rates for conventional mortgages right now, low to mid 6s as I film this. Government loans, those are going to be in the mid to high 5s, right? Everything depends on your situation, the lender you're talking to. Also, keep in mind, the ballparks I'm giving you are without charging discount points. There's a lot of lenders out there, especially with homeowners, where let's say your rate is 6.5 on a conventional loan. They're like, oh, I can get you to 5.75. And you're like, oh my God, that's so great. But they're charging you a bunch of money to get there. So if you're looking at refinance, please make sure that you're really reading the fine print. If you need help knowing if it actually makes sense and you're like, I don't know about my lender, maybe they're telling me the truth, maybe they're not, just call us 786-933-2077. My team's licensed in 50 states. We'll always tell you like, yeah, that's a great deal, do it. Or we'll be like, please don't do that. Like, just don't do it. And for my home buyers, here's the thing, guys. The highest rates have been this year on a conventional 30-year, high 6s. We're in the low to mid 6s. That's great. That gives you more buying power. So if you, and honestly, this really didn't start until August. So my home buyers between January and August, guys, call us, call your lender, get some updated numbers, because it is looking better. And I expect it to stay in this range unless we see any big movement on the inflation or job. Yes, there's other numbers that go into that will give, incremental, but those are the two areas the Fed is really focusing on. And those are the two areas that I think many of us are keeping an eye on. So that's rates. Whew. Let's talk about inventory. You see so many things where they're like, oh, there's so much housing inventory. It depends. So let's get real about that. Where is there a lot of housing inventory? Places where there's new builds. I've talked about this before. If If you've watched this before, you guys know it's the same story. Houston, Dallas, parts of South Carolina, guys, go look at those areas right now if you can work anywhere. All these builders came in at the same area. They're done with the houses at the same time. There's a lot of inventory. And when you live in an area where there's a lot of inventory, there's pressure on people with prices. This is where you see the deals, okay? Where you don't see the deals is where there's no inventory. So for instance, I've personally been looking at buying a house in Florida. The area I'm looking at has like 5 houses for sale. Seriously, I check every single day and there are 0 new houses that meet my criteria. The houses on the market are grossly overpriced. They're not selling. The sellers don't need to sell and no one else is putting their houses on the market. So there are still parts of the country where even though rates are lower, even though the newspapers are saying that there's all this inventory, there's not, right? And then the one that always makes me laugh is Miami, because Miami is always like #1 most inventory. The houses are like $10 million. How many buyers are in the $10 million range? You know, that's the thing too, is it's great if there's a lot of inventory, but if no one can afford it, you know, what's the odds? Like, I don't know, is a $10 million house gonna become $1 million, which is still a lot of money? Probably not. And the thing that I'm noticing this year, I think this year will go down in history as the great delisting. That's right. What does that mean? So many sellers aren't dropping their prices. They're just taking the house off the market. I've never seen anything like it. And I really think once we get the stats for this year, that's what you'll see. So if you guys are looking at houses on Homes, on Zillow, whatever, make sure you're hearting and saving the ones that you like, even if you're not going to go after them. Because what I'm seeing with the ones where I was like, maybe I liked that, or that was like, I was curious to see if that would sell at that price, you know, doing my market research. XYZ has been delisted. XYZ has been delisted, which just means they hit the end of their contract with the real estate agent and they took it off the market. So there's a lot of sellers that do not have pressure to sell. They don't have a loan, or they have a loan at a crazy low interest rate. So I am not seeing a lot of sellers that don't have to sell cutting prices. And that's the thing. We all want lower prices. Trust me, guys, I'm shopping with you. I want a lower price, but they don't have to sell. And until something happens where all these people with 2-3% mortgage rates, you know, have to sell, we're not going to see those price decreases. The only place we're going to see price decreases is where there's a lot of inventory that's creating pressure on the market. So really keep an eye on that. I'm not going to go on forever. A lot of stuff to cover this month and next month. I'm seeing so much going on right now, and I want to make sure you guys are protected. Questions, comments, want to get pre-approved to buy, want to see if the numbers work, want to call and be like, hey, look at this area. Do you think they're all crazy? I do. Sure, I love that stuff. 786-933-2077. Thanks for watching, guys.